From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for Friday the 30th of August, and it's Labor Day weekend. It's football season, and the Packers are kicking it off Saturday with the Philadelphia Eagles in Brazil. The Brazilians are celebrating the NFL like it's Mardi Gras. The Brewers will be in Chicago for the weekend with the Cubs, and then there's more. The Wisconsin Highland Games, the Twin 250s at the Miller Mile, and the Third Ward Art Festival, just to name a few. Okay, here we go. Thirsty raccoons are breaking into houses all over Germany and stealing beer. They are German, after all. They're getting drunk and passing out in the houses. Can't you just see a bunch of those cute little bandits passed out in your kitchen, all wearing lederhosen? From Germany, we're off to Missouri. Game wardens were called to help what they believe to be an American bald eagle in distress. The eagle was in such bad shape it couldn't fly. The wardens quickly diagnosed the problem. The eagle was simply too fat to fly after eating a whole raccoon. I wonder if that raccoon was liquored up. A man from Australia who owned a Lamborghini, a Harley, and 2 Rolex watches is under arrest. The question is, how could he afford all those toys? As it turns out, he's connected to the mob. And in addition, he collected unemployment benefits since 2019. Who knew the mob paid unemployment taxes? On the podcast today, we have Adam Bailey, Mike Helsel, Joel Dresang, and wrapping up the week, here's Kyle Tedding.
Well, thanks, Max. A bit of a mixed week, but positive overall. The S&P 500 added 0.2%, 14 points after a pretty strong close to the week on Friday. But unfortunately, the NASDAQ down 0.9%, down 164 points. And the Dow Jones Industrial Average up 0.9, adding 228 points on Friday to finish the week up 388. For the year, NASDAQ still up a pretty stellar 18.5%. The S&P 500 now 4 consecutive positive months, up 19.3% on the year, and the Dow Jones Industrial Average up 11.4%. Mike, normally we kick off with any of our economic news, handing it to Joel, but I know you've got a lot of big feelings you need to get out with respect to this week's revision to the GDP report. I think we've spent a lot of time talking about a slowing economy, and then, we get a GDP number this week. Again, a second revision for the second quarter that maybe you might have something to say.
I mean, I'll sanitize it, but just it got the GDP number got revised up to 3.0, which is a fantastic number and kind of flies in the face of, if you remember a few weeks ago when the market had that big sell-off and everybody was yelling about recession. Here it comes. Finally, we've only been screaming about it for 18 months. This time we're serious. Here it comes. And then the market rallies. You get this upward revision for GDP showing some good consumer spending. You're also seeing what the Atlanta Fed is doing with their GDP now, which for quarter 3 is showing 2.5, which is, again, another fantastic number. Maybe fantastic's a little too high, but it's a very solid number, which just is more evidence that a recession is not on the horizon like a lot of people have been yelling about. So, I'm not going to get into my full feelings here, Kyle, about it, as I was in your office, and I told you about Adam, but it just shows that part of it is investors and people in the market cannot jump off the ledge because of one bad day.
Maybe we don't get into your feelings, but we did get into consumer feelings this week. I don't want to steal Joel's thunder on this one, but consumer sentiment, which is kind of a squishy, feely number, pretty good. Consumer confidence also, again, another squishy, feely number, pretty good. And then you pair that with some durable good orders, some solid economic momentum. GDP certainly stole the show this week.
Joel, we're stealing all the economic data. Perhaps we can give you some of the market-specific stuff this week. Really switch it up for our listeners. But Adam mentions the consumer, and I think, you definitely can speak to the specifics. But we also saw in a lot of the earnings reports this week comments from consumers. And so what are we seeing? What are we hearing, kind of across the board on the consumer front?
Well, as Adam said, the consumer numbers tend to be survey-based, and they're squishy, to use Adam's technical term. And consumers are fickle. I didn't notice it this time, but 2 weeks ago in the University of Michigan survey, the sentiment numbers, the consumers were, on the one hand, saying that they're concerned about high prices, and on the other hand, they had the lowest inflation predictions in years. So and we've talked about this before, is that a lot of times consumers say one thing and do another. But we're seeing more in both the University of Michigan report and the Conference Board report that consumers are feeling better about where the economy is going. And a lot of it also is tied to politics. The partisan divide is also a divide on how people are feeling toward the economy. So the University of Michigan report today actually looked at more of the independents, people who aren't declaring one side or the other as far as the partisan divide. And it was the first time that consumer sentiment number was up in 5 months. It's still trading within a very narrow range, but it hit a bottom, a record bottom, 2 years ago, and it's up 36% from them. So those are good things, and economists look at those squishy numbers to get a feel for optimism of their spending, because we know that consumer spending drives 2/3 of the economy.
Yeah, I think it's why it's so critical that we keep an eye on those confidence numbers, those sentiment numbers, and why some of the retailers that reported earnings over the last couple of weeks have been in so many of the headlines. Adam, when I kind of look at the opportunity set out there for shoppers right now, we're seeing the Kohl's CEO report that maybe some of their consumers are a little more picky about what they're buying. But what I'm more interested in is some of the big ticket purchases, right? And if we have the potential for a Fed rate cut on tap, what might that say about what maybe younger consumers in particular are looking to do when it comes to buying a car or buying a house?
Yeah, durable goods is what you're talking about. We did get the durable goods numbers this month, up 9.9%. A lot of that came from commercial aircraft, though, not washing machines.
Not a lot of consumers buying commercial aircraft, but
Not yet.
No. But no, kind of get back to your question, though, on what younger consumers are buying. I guess the biggest durable goods order they would have would be a car purchase, because younger consumers, probably not homeowners at this point now with higher interest rates or higher prices, so they're not going to be buying dishwashers or ovens or furnaces or that sort of stuff. But consumers are out there and they're looking for discounts. I mean, they're being picky with all of this, but still getting out there and spending. And consumer spending has been decent. And the reason why we spend so much time focusing on the consumer and consumer spending is it drives 70% of our economy. And to get back to your point, Mike, about a possible recession, the reason why we focus on consumers, because if we're ever going to get one, it will take a collapse in the consumer. And we're just not seeing that right now.
Yeah, I think it's tough to see when stock markets are as high as they are, when house values are as high as they are, when there's all this support. Yeah, we point to the political landscape, we point to the Fed, we point to all kinds of what I think are important, but relative to the economy, fairly inconsequential pieces. It is, to your point, Adam, the consumer that matters. As long as they're working, as long as their portfolios are worth a little more, odds are that spending doesn't just drop off a cliff tomorrow. Other than that, we are emerging from kind of the COVID-era spending patterns, and I think that's the one thing I've pointed to more than anything else is maybe a normalization of spending, that we should be a little more discerning about our purchases. We did all those trips that we had put off for 2 years, and yeah, we overpaid for them a little bit because everybody else was doing the same thing, and so that hotel room was 20% more expensive, and the flights were $500 instead of $400, and when you're talking about that one trip that you had put off for years, well, you might be willing to do that. Now we're just back to the same travel we're doing anyways. Do I drive to see the family for Thanksgiving or do I fly? Well, maybe this year I drive because those prices were up, and that allows the prices to come back down to a more normal range. Oh, by the way, you want to talk about what was driving some of those inflationary pressures? Yeah, it was chasing that pent-up demand. And so I think as we kind of come full circle on the consumer spending piece, it's pretty clear to me that, I think a shift towards more normal inflation, a shift towards more normal spending patterns does help to kind of smooth all that out.
And Kyle, we also had numbers this week that emphasize a problem that we still have ongoing in the economy, and that's housing. We had the S&P CoreLogic Case-Shiller Home Price Index, which is a mouthful, but that was showing that housing inflation is still more than twice what ordinary inflation is. The overall inflation, we had numbers today and yesterday saying it's 2.5%. Remember, the Fed goal is 2%, so we're getting closer to that 2%, but we're still not there. Well, housing inflation is 5.5%, and it's been running very much hotter than regular inflation for a long time now. There was a study that the Minneapolis Fed put out this week that showed that even though they're starting to see leases, the costs for leases for housing to go, that they're seeing that go down, but it'll take 2 years before that shows up in overall inflation. So that's something that's really pushing it up. And then just two other real quick things. The National Association of Realtors have a pending home sales index that they reported this week. That's at its lowest point in 23 years since they started this thing. And then the other thing was that consumer confidence number from the Conference Board showed that plans for buying a house are the lowest that they've been in 12 years. So those are all pretty low.
They are, and I think, that data is probably going to be pretty fickle in the months to come, just as we look at shifting rates, entering a real estate market that tends to move a little slower come December than it does going back to, midsummer. And so I think we are in for a lot of updates. What I love about that is that you've got that Case-Shiller home price index you were talking about. We'll never underestimate a data aggregation firm's ability to monetize that data. Precisely the reason why it's a mouthful. S&P and CoreLogic decided, hey, we want a little slice of that pie.
Your name here, yeah.
And so I think, you look at how wonderful we are able to gather all that information, but also then that some of that information gets used against us. I think, Adam, one thing I really want to point out is that we had a really rough start to August. It was, for all intents and purposes, it was a stretch for really about a week and a half in which we could have been easily in correction territory. And by the 5th of August, down 7-8% on the S&P, a little more on the NASDAQ, really kind of pushing some of those low lows. And yet we're finishing August here in a much better place.
It's interesting what has drove the second half of August rally, right? Because we started the month very bumpy, and we've rallied substantially since. And you kind of look back at what was the culprit of the rally. And there's a few key points here. One is the real prospect of modestly lower rates here in the near future from the Federal Reserve, lowering rates probably as soon as September. On top of that, we've had solid earnings and solid forward guidance on earnings. And, the last piece is just some steady economic momentum. You put those three things together, and that has been the core as the culprit as why we rose throughout the second half of the month of August.
And Mike, perhaps a reminder that maybe running away from a little bit of volatility can sometimes cause a little more harm than good.
Yeah, it can. If you see a bad day, because I've said before that everyone, just psychology, everyone remembers the bad days, but they don't remember the small incremental good days that get you back to even, right? Like everyone remembers the day the market dropped terribly, but then they don't remember the week where it went up 1%, but just slowly over 5 days, right? And I think part of the issue for a lot of clients is there's so much information out there that it almost makes kind of your decision-making inefficient, right? You can just find whatever theory or argument that suits what you're thinking at that time, and that's the way you're going to go. And now I'm going to call Adam and say, we had a down day, and sell it all because I need to get out because I'm panicking. And so it's funny how people take certain reasons they see in the news and then have them guide their kind of investment process. I mean, I wrote down the one if we all remember what was one of the kind of quote-unquote causes for that big downturn in the market earlier, Japan raised their interest rates a quarter point. And I'm not saying it's for everyone, obviously, but a lot of people really freaked out about that. Well, Japan's back to recent highs, and they're doing just fine. They didn't go into a recession. So just when you see big moves like that, it's just important to not necessarily panic and just know that, like, not saying things will always work itself out because there's recessions, there's depressions, things like that, but to not overreact, just to, like, you and your advisor have a plan in place. So just kind of stay calm. And if you need to talk to them, give Adam a call.
Well, I like that point. Yes, call Adam. You can reach me at you know the number, anyways. But now I like where you're going with this. You don't focus on the noise, right? Because there's a lot of noise to distract you from the fundamentals, and I find that when people do focus on the noise, the word I like to use, it just causes paralysis. Right? You can't act, or you want to make a knee-jerk reaction, kind of one of those two things. And it's a reminder why we focus on just the simple things: interest rates, earnings. I mean, that really does drive the market long term, and that's why we talk about it every single show that we start. Where's interest rates and where's earnings?
Well, it's funny. Oh, sorry, Kyle. One of the things, the word you used, Adam, on your last point, is a word I've used over and over again in my meetings: solid. Everyone is looking for boom or bust with, I want to hit the grand slam with my investments, or if the market goes down, they remember that. But I've been saying all the data you've been saying here today, it just adds up to solid. It's not boom, it's not bust. And that's not a bad thing. Just being on solid footing with the economy, solid, not great consumer spending, those numbers can push you forward. Don't run away from that.
I've been, I think, very excited to talk about market returns, very excited to talk about the overall strength of the economy. Those clearly big themes of our podcast. I think there's another area that unfortunately we've been pushed into talking a lot more about, which is some of the cybersecurity threats that are out there, some of the other issues. And Joel, I know this is something that you do a lot of research into, along with writing about it for our newsletter. I am continually amazed at some of the headlines I see on the latest breach, this national public data breach. Some headlines stating that there's as many as north of 2 billion Social Security and other account data compromises. We don't have 2 billion people in our country, and so maybe temper some expectations there. The better reporting I've seen is that something like 200 to 210 million Social Security numbers compromised, which still represents the vast majority of our population. And to me, it was a reminder to do something that I know you had written about some time back and that we tell customers quite regularly. I went ahead this afternoon and froze my credit, in part to see, okay, how painful is the process, but in part because, it was time to finally do that. Tell me a little bit about kind of what you've found there. I know that's a process that you've looked at in the past.
Yeah, it's not for everybody. It makes it difficult if you're seeking credit, if you're getting a loan for something, if you're renting a new place, any time that somebody would want to check your credit, it's basically putting a freeze on your account so that the credit agency, when they get a call from someone saying we're opening an account or we're looking into something, then they would let you know, and they'd say no, that person is not in the market for that. So somebody stealing your identity and trying to do that, they'd be frozen out. So it can be kind of a hassle if you do that and you are in the market and you do want, the car dealer to call up to find out, if they can, finance your loan. But I don't know what your experience was. Was it a pretty easy thing to do?
They have made it incredibly simple, and you go to each of the 3 credit reporting bureaus. You essentially can sign up for an account right on their website. Of course, you're providing them with your information to do that, but they already have it all. And then it's clicking a button that says freeze my credit. You can just as easily unfreeze it if you need to go out and get a car loan, a mortgage, a credit card.
And not long ago, it wasn't that easy. But because we've had more of these incidents, there's been more pressure on those agencies to do that. A couple of places that I would tell people to look. One is if you know that somebody, or you think somebody has tampered and has your information, to go to identitytheft.gov. That's run by the Federal Trade Commission, and that's a good source to get information and to have something done. The other one is the annualcreditreport.com. And there you can go to the three main agencies and get a look at, and everybody's entitled at least once a year to get a free look at their credit reports to see if there's been anything afoul. But a couple of things. I mean, watch your bills. Watch your monthly credit card statements to make sure that there's nothing awry there, and be careful about that kind of stuff. And we've got tips on our website that Jason has provided on just being careful online and making sure that you're minding your information so that it's not easy for somebody to get all that stuff.
We place such an emphasis in all of our conversations, but especially in some of those more publicly facing ones, on all of these ongoing issues there are with whether it's senior fraud or whether it's just fraud more broadly, scams that are out there. You'll continue to see us write about those. As newsletters come out, you'll see more updates. I know you're working on one right now for the next newsletter we have coming out, just talking about another instance that's out there right now.
Yeah, it's the elder fraud hotline, and people are, imposters are saying that they're calling from the elder fraud hotline and give us your information, for Pete's sake. So yeah, it's just kind of being careful about that kind of stuff. And you guys are here managing people's wealth and trying to help them, hang on to their money and grow it. And you don't want to see them losing it to scams.
Precisely.
It's a reminder, you always have to be vigilant. You can't let your guard down.
I think maybe a good place to end it, despite maybe a little bit of a sour note with some of the scams. Plenty of positive notes for the market.
Spend it, have fun with it. Don't lose it. Yeah.
There you go. That's the positive spin. And an overall strong market so far this year, now 2/3 of the way through. We enjoy doing the program for you. We'll talk to you next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.